CME Group is launching Micro E-mini futures contracts. Discover how a smaller Micro E-mini futures contract opens the world to greater trading possibilities.
Welcome to Striking Option, the show that reveals the options you have to better navigate markets. I'm Jeff Kilburg, and I'm joined today by Scott Bauer. Hey there, Scott.
Hey there, Jeff.
Well, earnings season started off pretty strong, and we have seen financials report. If it's BlackRock, if it's Morgan Stanley, if it's JP Morgan, all to the upside. Is there a reason that we're going to see a continued movement higher in the S&P 500, and is it earnings?
Well, earnings is certainly a great start here, and some of those earnings expectations were beaten down pretty badly, but so far so good, and if anything, this could take us to that next level.
Well, we are very close in the S&P 500. We're just a sneeze away from that all-time high at 2940. Are we going to hit that this week or next during the earnings season?
I don't know if we get there next week or two, but certainly with this momentum, if that continues, it's not out of the realm of possibility.
Well, very interesting. We will be watching. You ready to get into this first lightning round, Scott?
Yes, let's do it.
Gold drops. Well, we did see a recent plunge in gold. Is it these central bankers? Is the confusion in the market? Or why are we seeing a drop down to $12.75?
Yeah, it was a pretty quick drop. It is central bankers, it's earnings, it's a little bit of risk off just on the macro environment.
Well, very interesting to see the range that gold was presented in 2018 as well as 2019. What type of trade example would you utilize to embrace this range that gold was presented?
Well, I'm potentially looking to take advantage of this quick drop that we saw here by selling a week 4, which is the April 26th expiration, 1270, 1250 put spread. And this spread potentially allows an investor to collect $320.
This is interesting. I like the way you're approaching this trade example. The June E-mini gold future contract was trading around 1278 when this trade example was priced, and that at-the-money vol was about 9. So where's this break even for this trade example?
1266.80 is the break-even point.
And that's really interesting because 1257 is that 200-day moving average in the futures contract, so maybe there's some support there, Scott.
Yeah, certainly from a technical standpoint, that's a big area to watch.
Great stuff. And please remember, these are trade examples, not trade recommendations. Let's move into the second lightning round, pal.
All right, let's do this one.
New highs. Well, it's very interesting to see. We talk about the S&P 500 all the time. We are very close to a new all-time high in the S&P 500, but I want to focus on the Dow Jones, the E-mini Dow Jones. We're still a couple thousand points away, but we are seeing earnings season really be the undercurrent in those blue chip names.
Great start to earnings season like we talked about, the big banks coming out. And if that continues, that may follow the S&P to all-time highs.
And it's interesting. We approach a lot of different trade examples here on Striking Options, but today I want to talk about hitting a single, maybe laying down a bunt and just getting on base. In this trade example, I'm selling the week 4 27,000 call, and I'm buying the same expiration week 4 27,500 call in the E-mini Dow Jones. This is going to allow an investor to potentially collect $88. Not a lot of premium there, Scott, but at the end of the day, this is hitting a single, correct?
Exactly. It's further out of the money, and that's exactly why you're saying that. And why not have the best batting average on the team? So what I really like about this, Jeff, is the trade expires on Friday, 4/26, and the June E-mini Dow Jones future contract was trading 26,420 with at-the-money vol about 10.75.
So that, exactly, Scott. And the break-even point for this trade is about 27,018. But we talk about how to provide income in a portfolio. How to utilize options on futures to provide that synthetic income. This small amount of premium that we're collecting with this out-of-the-money call, this is the trade example. If you add it up week after week, month after month, this is how you get that synthetic dividend, correct?
Absolutely. And again, it's using out-of-the-money options instead of in the money or at the money. So a little bit lower premiums, but also much further out from being in the money.
Fantastic, Scott. Thanks, as always, for coming on to Striking Options. We also want to thank you for tuning in. And please tune in every week as we will continue to strike options.